Hi, and welcome to our Funded Trader interview series. Our today's guest is a trading specialist, Riccardo, who left Wall Street's behind with his 24/7 madness and started his own trading career. He shared with us many exclusive secrets of the professional trading industry and talked about his mindset and psychology of trading. If you are interested in another success story like this, click here.
It's actually an interesting story because it all started when I was in college. I was studying for different majors. I was doing biology, and on my third year of my degree, I was like, this is not for me. So then I started to get into finance and was looking at the stock market because I live in the US, so I always pay attention to every day. I used to watch CNBC and all Bloomberg and all the major TV network for business, and it really caught my attention because I always loved math and economics. So then I switched major, and I really got involved, and I started to invest on my own. First of all, like on the U.S. stocks, like I bought some Apple, Amazon, and then I started to look into like major figure, and I started to read books on trading. Like Market Wizard and other books. One was about this smart investor, and it really caught my attention. And then when I finished college, actually, I had the opportunity to get a job for a prop trading firm in the States, in New York. So at 22, I got this job, and I got involved with them, and I stayed with them for 3 years. And I was mentored by a trader in New York. But then I was like, I want to be more independent. So then I started to look into online trading firms. And in fact, back in the day, I'm talking before COVID, there were only like a few upcoming firms. I don't know if you remember, Top Step used to do Forex as well. So I started with them, but they were like at the beginning. And then, of course, I did some FTMO, and little by little, I really switch my attention from stocks to Forex, because I started from stocks, from the stock market. But then with Forex, I realized I had more freedom because the market is open 24 hours, 5 days a week. So I can really, it was like a life-changing opportunity for me. And then little by little, this industry grew a lot. And finally I came up with through Forex Funds. I was looking for a firm that was more flexible and was easier to pass the challenge, because back in the day, I remember like they used to have really strict rules. Like they used to have like a lot size rule and all of that, so it was harder to pass. And with True Forex Funds, I was going over like all the challenge process, step 1 and step 2. And I was like, it's perfect for me. It was smooth, easy, and I really liked the platform. And of course, I did some background check, was reading reviews, everything was fine. And I gave you guys a shot, and it was really a dream come true, because so far, I mean, no problem, no issue. And I will recommend True Forex Funds to any new upcoming trader because everything's been smooth. So this is like some sort of my background, trading, my trading background, and how I found out about you guys.
Riccardo, I'm really glad you said those things because I see you trading with us only for 2 months.
Correct.
You made it more than $10,000 in profits.
Right.
Obviously, you withdraw it and you continue trading on the funded program. Now, what's really interesting from your account management is that you only lost one account, and after all, you had a few really good attempts on passing phase 1, phase 2, and you're managing, how much are you managing right now?
200K.
Yeah, so we have the max capital allocation as well. I'm pretty sure you're heading towards.
Yeah, so in fact, I may try if I get a second payout, I may try to buy the 200K, so I do a max allocation.
As I'm getting straight from your words, you worked at an offline prop firm, which is a little bit different than an online prop firm that we are. And in the industry, a lot of competitors are working in the online prop firm arena. Can you tell me about your experience working in an offline prop firm? How is it different than from true Forex funds?
So, as an offline environment, of course, like my team was like we were 5 people, with a supervisor, with a senior trader. So every morning we used to have a meeting before market, and we always used to share our own ideas and see what were the market conditions for a specific day or for the week. So it was more of like a team environment. Now you used to collaborate more online. Of course, you're more on your own because at the end you're by yourself. You can find community. That's why I like to share, because I like to share my ideas with other people, because sometimes you're wrong. And if you're always by yourself, you think you're right. But if you share an idea with other people, I think you grow as a person and as a trader. So this is what I really liked about the offline trading firm, is because sometimes maybe you were stuck with a position that wasn't going your way and you didn't understand why, what you did wrong. And maybe there was a colleague of yours, a trader, that was like, try to make you understand what was the reasoning, what was going on. So this is what I really liked about the offline environment, that it was more of a team environment. Everybody was collaborative and everybody was helping each other. But I think nowadays online you can try to replicate the same environment if you find a nice community in chat. You can really try to find a small team and you guys share ideas. So this is like the biggest difference for me from the offline and online, just the fact that you were always connected with people and you were sharing ideas every day.
And Riccardo, were you assigned a certain instrument you had to trade, or how did your day-to-day life look like?
Back in the day, was mostly stocks, mid-cap stocks. So I didn't touch any small-cap stocks. I'm talking about like $20 to $50 share and up. And this was my target. And I used to focus mostly on the tech industry. Mm-hmm. Other people were more like biotech, financial sector. I was mostly assigned the tech sector. So I was mostly trading like on the NASDAQ.
And could you bring those knowledge to today's trading? Now I see you're trading Forex pairs,
yes,
Euro, USD.
I actually, I will tell these two people, I think Forex, if you learn Forex before, you learn every market. Because Forex is based on macroeconomics, micro events, and that's what dictates the market overall. And it's something that I learned after, because I started from stocks and then I moved into Forex. And I feel like when I made this switch, Forex made me a better trader, because everything that you learn from trading stocks or crypto or future market, you can apply into Forex, and then Forex really you can really enlarge your learning skill, because it's really like you incorporate all technical aspect, the macroeconomics. So you can use different, if you're a sentiment trader, fundamental trader, technical trader, news trader, Forex is for you. So for me, the transition was really positive from stocks to Forex.
Riccardo, when you analyze fundamentally, do you adjust interest rates and the Forex trends, underlying instruments trends? How do you analyze the both?
So yes, for example, I tend to look at, first of all, I tend to look like the major news that came out during the week or during the month. So if there's like a press release from the Fed or the European Central Bank, or even the Australian, the Reserve Bank of Australia, I tend to focus on those, because this is what dictates, on the long term, this is what dictates the market movements. If there's a rate increase, like this year, with inflation, the central banks, they've been trying to fight inflation. So there's been like a war on raising interest rates. So I've been really focused on that. But then like I use the DXY as a point of reference now, because the dollar is the major like reserve currency. And then I look at the index, like S&P, especially, and the European index and the oil. So I do like an overview of all of this to see what's the trend for the week, for the month, based on my entry point.
What do you think, Ricardo? The XY US dollar will stay the reserve currency of the world?
Oh, they've been talking about like some people they've been talking about they want to bring back the gold standard. Other people they're saying crypto. I think there's a long way before we get into that. I think the dollar for at least the next decade, I think will be still around with us. But I think in the future there may be other opportunities in the world. But for now, I think at least since until we retire, I think the DXY will be still around with us.
Okay, thank you, Ricardo. I think without further ado, we can go to the charts, look how you trade on a day-to-day basis. By the way, Ricardo, do you use primarily the trading view or you use something like Sierra chart? I know a lot of people who are trading futures, contracts, or use Sierra chart.
I like to use TradingView because it's smooth, easy, has everything for me, and I like it to analyze. No, I'm not big on indicators. I think the simpler you keep your chart, the better it is. No, I just tend to use the moving average cross, depending on the time frame. So sometimes I stick with the 20, 50, and 200. For a longer time frame, I use the 50, 100, 200. But TradingView for me, it's like I will recommend to people just as a tool to analyze your trading, even before or after. That's what I use the most.
Before we dive into the hard skills of technical trading, can you tell me about how much time do you allocate for fundamentals? Do you have a weekend analysis, fundamental economical analysis when you spend a few hours?
Yeah, usually I think the best time it's Sunday because usually like Monday usually it's a slow day. So usually Sunday evening, sometimes right after the opening, I spend a couple hours, like 3-4 hours, and just what I do is pretty much I get ready for the week ahead of me. So I look for major events. I look for if there's like an important news. Well, then I save those days on my calendar, and then that's where mostly I do my analysis for the week. If I see any big opportunities for the week, I tend to keep it simple. One thing that I always tell people: don't overcomplicate your trading. Just focus on like 10 pairs. Like I don't do usually like when I trade during the day, I do 1 or 2 trades. I don't overcomplicate myself, and I focus like 1, 2, maximum 3 pairs a day. So that's what I would tell people because as I know people that they do 15 trades a day, and it's too much for me. Keep it simple.
Regarding fundamentals, do you have any recommendations, websites that you are follow?
Usually like Bloomberg Market Watch for the news. Then to keep track of your calendar, my Forex book, just to keep track of it, all the news they're going to come out, and you can save them on your calendar. And then like I like to read for Forex FX Street. No, there are people with 20, 30 years of experience. They analyze the news ahead or even after they came out, and I like to read on their opinion. So Forex Street is something that I usually read, just to see like what's the general public opinion of an upcoming news or the market environment.
I think we can go to the die-hard technical parts, how you analyze the markets, because fundamentals could take a lot of time and investigation about the upcoming news events. Of course, everyone can check out the economical calendar and some of the websites that Riccardo just mentioned. But without further ado, let's jump into the charts.
Yeah, so right now in front of me, because I was looking into this pair, euro Australian dollar. It has been moving in quite interesting in the last couple of weeks. I think that, in fact, I think this is the pair where I made the most money in a day with my True Forex funded account. But to keep it simple and just to go over my trading strategy, what I like to do is I tend to use a multi-frame approach. So I use the 15 minutes time frame to identify my entry and exit point. But then I use the 4-hour chart and sometimes the daily chart for the trend to identify if it's like we are in a bullish trend or a bearish trend. So for example, right now in front of me I have the 15 minutes chart, but then I can switch to the 4-hour and it's a clear bullish trend so far. So what I will do right now, for example, if I'm not into this pair right now, but if I were, for example, to enter, many people, they want to know where you put your entry point, your exit point, so your stop loss and your. So for example, in this case, the yellow line that you guys see it's a 50 simple moving average. The red it's the 100 and the purple it's the 200. So right now, for example, let's say that there is a reversal trend and you're long, so you want to exit. What I will do is I will try to put my stop loss below the 200 moving average at the first, right below the first support point, in case it breaks. So this is so for example, on the 15 minutes chart, I will put my stop loss right now right around 167 and 400 right here, in case the trend reverse. But for example, for me right now, it's a clear long, and I will put my exit point at the first resistance, which is around 1.6830. This is just to give some people overview where to put your entry and your exit point in your chart. As far as trading strategy, I like to use price action, which right now is being really popular because now with ICT, everybody's been talking about smart money concepts and ICT, which I think is something that people have been using for a long time without having a definition of this strategy. So,
Riccardo, did you use the same concepts when you were trading at the offline prop firm in New York, or some kind of similar price action concepts?
Back over there, I remember, we used to be very active the first 30 minutes of the opening in the market, and we used to trade the gaps up or gap down. So we always waited for like 30 minutes after the market opened to see what's going on with a particular stock, why it moved so much up or down, and then I would react after 15-30 minutes. I will try to find a good entry point and I will just ride the trend. This is something different from Forex. I try to use this technique when there is like a news release. When, for example, there is like a interest rate decision, there's going to be a major movement on either side. So I try to wait 30 minutes to see what's the trend, if there's a gap up or down, and then I make my decision and I let it go. So when there's like a news, wait a little bit. Don't jump immediately because there is weird price action the first couple minutes. So this was like back in the day with the offline trading firm. This was one of the typical strategy we used to use. We used to ride the gap ups or gap down with them based on the news for a particular stock.
If you have any questions or feedback you want to leave in the comment section below, go ahead and don't forget to hit the like button and subscribe to our channel. It's great to hear some feedback from an institutional trader. A lot of retail traders or us from the street who's starting trading just now would want to learn the institutional way of trading. Of course, ICT, smart money concepts, provide some insights for that, but it's good to hear it from someone who's actually been trading at a prop firm and know his way in and out.
Yes, and in fact, probably the thing that I learned the most trading offline was when to enter a trade, because sometimes you see a movement and you want to jump into a trade, but the best thing is to be patient and to wait for the right opportunity. And this is something that I really learned working with a team. Uh, if I was by myself, I think it would take more time and longer to understand this concept, to be patient.
Ricardo, can we walk through one of the best trades you can recall trading with True Forex Funds?
Yes, I think it was on this pair, and I think it was the last week of July. I think it was July 20, I think it was right here, July 26. And what I did pretty much, let me see if I can pull up the 15-minute chart and go all the way back. Because I remember it was a downtrend. Here we go, 26. So pretty much what I did, it was I jumped on this movement over here from. I think I entered like 162,800, and I get out here 164 even. So I wrote this trend. I think it's 120 pips, which is a great amount for in a single day. So this pair was in a downtrend for a couple days. So I was waiting for the right opportunity to enter long. So what I did, I was looking over the news, nothing major. But then maybe if I use the daily chart, you have a better idea. I went all the way back to last year. I don't know why. So here you go. So this is you have a better idea here, pretty much. These are on a daily chart. So the trend was on a downtrend, and as a point of reference, I like to use once again the 50, the 100, and 200 simple moving average. And I was looking here, and the 50 moving average didn't cross below the 100 moving average. And as you can see, right around 62, there's a strong support point. And this is a clear, I think technically you would say like a triple bottom. Now it's on the daily chart, 1, 2, and 3. So what I did, I used the 15 minutes to find the entry point, and I just let it run. So I found the right moment to enter on the smaller time frame based on the daily chart, though, because on the daily chart, I realized that the trend it was a bullish trend. It was gonna reverse because the 50-minute time frame didn't cross below the 100 time frame, and the same indication gave me on the 15-minute chart. So it's called the golden cross when you cross from below to up. And plus the sentiment and let's say the price action gave me a strong signal to enter long. And so on the daily chart, this is the day where I made the best trade on True Forex Funds, because I entered on the low 162,700 and I closed on 164 even. So I made 120 pips. It was a simple trade because sometimes if you keep it simple, the better it is. No, that it didn't break the support. It didn't go below. 15-minute chart gave me a good entry point, and just let it run. And I made 120 pips, and I made good profit, and I closed my position for the day. So one thing I will tell people: always keep it simple. Don't overcomplicate yourself.
Riccardo, do you use the even numbers as well as your support resistance areas, like 1.64 even? 1.62 even.
So one thing I learned throughout the time trading is that, for example, once the price it goes, like for example in this case it was 164, no? It always breaks above 164. It doesn't. The price. It doesn't. It doesn't stay there. In fact, in this case, no. After one day, it broke the even number. Now 164, if you look at not the second day, but the one before, the one after, it broke the even number. So sometimes, if you use the even odd number, it makes sense because you can tell the price wants to get there. It wants to break the 64 or it wants to go below 163. And it's something that I've noticed. In fact, sometimes I tend to wait on my entry point because I know it's gonna break that particular number, or it's gonna go below the particular number. So sometimes, no, if you have like a mathematical approach, I think you can apply it to trading.
I totally understand you, Riccardo, and it's a clear technical trade that you have taken. However, do you take, for example, the euro's interest rate hiking area that it's been in the past months into consideration as a confluence when you're trading euro dollar, euro Australian dollar?
So yes, I think that no, when you do a trade, especially if the news is it was released shortly, no, you always I think for at least 2-3 days you see that the pair trade based on the news for at least 2-3 days. So you have to take into effect the news that was released. On the longer term, like after a couple days, maybe you have like a retraction, you can make a trade. Maybe you try to catch like 50 pips on a short term, but you have to take into consideration like the interest rate decision, because especially if it's like a surprise event, maybe the central bank raised 25 bps higher than was projected. You have to really pay attention to the news, because for example, one of the worst trade I had last year in November, because you also have to take into consideration the bad trades too when you're learning trading. I remember it was November, right before Thanksgiving, and it was when there was a surprise in the CPI news release for the US. I think it was below the expectation, and it jumped. I think it jumped like 150 pips. So I was waiting for a moment. I was waiting for an opportunity to enter short, so reversal, because the dollar collapsed. So I was trying to catch a bounce, but I had like 70 pips loss on that trade, because literally for 3 days, that pair I was into euro dollar, it was just going up and up and up. I think it went up like 400 pips just after the news, because it was really, it was a shock. So sometimes, if there's an important news, a surprise, you gotta wait a little bit, or you just ride the trend.
I want to have a last question from you regarding trading decisions and indicators. I know a lot of friends in prop industries are using footprints charts, volume profiles for futures contracts because they are trading futures, mostly are commodities. What's your take on that? Did you ever have to use these indicators, or just you mainly stick to the simplest indicators that you can find on TradingView?
Sometimes I use volume indicators just to see, for example, where is the money going? What are the most active pairs? Because in trading, you want to trade volatile pairs. You wanna trade those type of pairs. So sometimes I use volume indicators, but not really that often. Like sometimes, like I use Fibonacci just for my personal analysis. For the week, just to see like what are the pivot points for the trend. But when I actually trade, or when I'm on my screen and I trade, I just keep it simple. Like because there are lagging indicators, so I don't rely much on relative strength index, for example, or the stochastic oscillator, or the moving average cross direction, because those are lagging indicators. So I just keep it simple to analyze the market on my own, for example, on a Sunday evening, just to see what's the overview market sentiment. I think sometimes I put into my chart the volume indicators and other things, but when I'm actually trading, I just rely on the price, action, support, resistance, and just the sentiment. You just have to take what I see on the chart is what it's giving to me, and I want to take advantage of that.
So thank you, Riccardo, for giving some explanations and insights about an institutional mindset, and trading behaviors. Can you tell me about how do you manage your risk overall?
Risk is probably the most important concept in trading, and this is something that you learn the more time goes by and the more losses you take into consideration. So, for example, if you look into my win rate, I've been trading since 2017, so it's been 6 years. My win rate, it's stuck around 60%. So I'm not a perfect trader. So I take losses. And you have to really manage those losses because it can affect your psychology and your mood. So for example, if you're in a bad trading streak, you have to really take some time off from the chart. Otherwise, you really gonna dip yourself in a bigger hole. And it's something that I did in the past and something that I learned from my past experience. So you have to be patient, disciplined. You have to wait for the right moment because trading is not something that goes away. Like maybe you missed out on a trade on a particular day. The next day you can come back and make that trade and make the money that you would have made on that particular day. So it's a psychology really aspect that affects your trading. As far as when you trade, your risk management, always try to put a stop loss that's comfortable for you to recover the next day. So for example, based on your lots, now if you're trading, like in my case, I'm trading 200K account, so I have more to lose because I can lose 5% on the daily, so I can lose 10K. I tend not to lose more than 5K on a day. So at least I have more time to recover and I have more, even at the next day, if you lose under 5K, I have 2 more days ahead because you have to it's a long-term type of game in the sense that you have to survive. Not every day you can make money. If you don't mind, I wanted to share some concepts I learned in a book that I would recommend people to read. It's called the Zurich Axiom by Swiss bankers. And it's a book about risk management. And it has like 12 axioms. And it's perfect for risk. I really learn a lot. For example, I underline 4 concepts. So let me read it. I put in bold. In fact, I was typing like for risk management, I recommend the Zurich Axiom book that underlines the 12 principle risk management that every trader investor should use. So in bold, I put my 4 favorite one because I think it really improved me as a trader more than an investor, and also as an investor, it really improved my risk management. For example, when you are on a trading, when you are on a losing trading streak, accept the small losses cheerfully as a fact of life. It's better to lose small 3-4 times in a row than lose one big time. This is what they're saying. For example, one of the axioms they have, it's like if the ship is sinking, don't wait, jump. So in trading, that means that if you're losing trade and you're hoping that the trade is gonna reverse and you're gonna go on your way, it's better to just take the loss and don't pray, you know what I mean? And that's what they're saying. Or for example, never try to save a bad investment by averaging down. People think that maybe they enter too soon and the trade is going against them. So maybe they are 30 pips short, and they're trying maybe like to save their trade by entering a new position, try to averaging down, and then the trade keeps going lower and lower, and actually your losses gets bigger.
Ricardo,
and also another
Ricardo, yes. Can you mention where we can read more about the axioms, or can you open maybe?
It's a small book you can find in Amazon online. It's I think it's like $5, $8. It's a book, and I think if you just type the 12 axiom of Zurich, the 12 Zurich axiom, you can find a PDF on Google.
Okay, thank you.
And it's something that just give a quick read. I think it will improve everybody's trading psychology and risk management. In fact, the first axiom, it's a tricky one because it says, worry is not a sickness, but a sign of health. If you're not worried, you're not risking enough. It pretty much means that if you want to make money, you have to risk some amount. You cannot expect to make a nice return by risking small. So if you're worried because maybe you risk and maybe you're in a loss, it means that you're actually trading, you actually are into it. But if you're just relaxed and you're just waiting, you're just waiting and waiting, you didn't risk enough. It's a weird concept for people because they're like, well, sometimes the less I risk, the less worry I have. But at the end, you want to make money, so you have to risk. And that's what they're trying to say. And also, even the second one, the one below this one says, always take your profit too soon. No, people say, let the profits run, which is something that I do. But sometimes, you take your profit and then you see that the trade keeps going on your way and you think that, oh man, I should stick with that trade. I could have made more money, right? But you have to think positively. You're like, at least I made some money. What would have happened if the trade would have gone against me and I would have lost that profit? You never know. It's a game of uncertainty. So if you take profit and you think that you should wait a little bit longer because maybe that trade will profit more, it's okay. At least you made some money. So you gotta think positively.
Yeah, thank you, Riccardo, for sharing. I will definitely take a look at the book, and hopefully also everyone else who watched this video will grasp on the concepts that they can find in it. Can I have a last question from you? If you would recommend True Forex Funds who's anyone starting trading right now, what would be your advices?
I will tell people that True Forex Funds it's one of the best trading firm. I know right now there are many upcoming trading firm, but True Forex Fund has been for a long time. It's trustworthy. The platform is smooth. I really like the dashboard. It's clear, crystal clear. Execution is perfect. I have no problem with slippage, anything like this. And now you don't have any minimum trading days, so you can take your time to pass the challenge. It's only 8% profit target step 1. I think it has every perfect environment condition. Everything is smooth. My payout was smooth. It didn't take really that long time. I mean, right now I'm really like everything's perfect, smooth, and I'm relaxed. Like I do my trading. Any trading style is accepted. It's a perfect environment for me. So I would recommend everybody to give it a chance because no restriction. You take your time. The community is strong. The support team is strong. So give it a chance.
Any last words?
Hopefully, maybe we have another interview in a couple months with more profit coming along.
Definitely looking forward to it. And guys, if you enjoyed this interview with Riccardo, just hit the like button and let us know in the comment section below how you liked it. Thank you, Riccardo, for being here. If you enjoyed this video and found it helpful, be sure to hit the like button and leave your feedback in the comments below. For more success stories that can help you become a better trader, click here. If you're interested in our educational content, click here. And of course, if you don't want to miss out on any new videos, don't forget to subscribe here. See you in our next video.